For those taxpayers that are in the 15 or 10% or are in a tax bracket lower than 25, the tax rate is 0%. And so if you're in a situation in 2011 or potentially in 2012 as well that presents itself where you're able to qualify or have your tax position put you in a tax bracket lower than the 25% tax bracket, then all of your investment income or the majority of your investment income is going to have a 0% tax rate. For the most part, somewhere around $70,000 of income will keep you in those brackets with all the exemptions and personal deductions and standard deductions and personal exemptions that people can get. Who is this important to? For the small business owner that maybe made a lot of capital expenditures, is able to expense through depreciation, very favorable depreciation rules that we have, bonus depreciation, and it creates a large deduction, and maybe that deduction can wipe out a significant amount of their income. And if they have a portfolio income and maybe they're invested in securities that are generating lots of dividends, well, that can create dividends that aren't taxed at all, tax-free dividends. Not tax-free, they're taxed, but because the tax rate on those in the 15 and 10% tax brackets is zero, in essence, the tax liability would be zero on that dividend income. If business owners operate their closely held business through a taxable corporation, they may want to think about distributing those earnings out and having a significant amount of those earnings taxed at a 0% rate. In the future, the cost of distributing those earnings may be at a 35 or 40% tax rate. So it's something the business owners or those who have portfolios and the mix of their portfolios maybe should be geared towards dividends, or when they're planning for the 2011 tax season and before they actually file the return, maybe they make these special elections to claim bonus depreciation and 179, and these are accelerated deductions that you can accelerate deductions or deductibility of items that have that normally would be expensed or depreciated over a period of time. And so by accelerating those deductions, you drive down your business income or your W-2 wage income or income that's taxed at a higher rate, but you're driving your overall taxable income down, but then it allows you to get in these lower tax brackets and have your dividend income tax at zero.